Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had a great trading day yesterday. We're going to kick it off here like we do each and every day, identifying both breakouts and reversal trades from an educational perspective, hoping to give you some views on what might happen today in the markets. We're going to start with our equity markets. We're going to move to commodity markets, and then we'll finish up with currency markets. So it's going to be a jam-packed half hour. If you're new to the channel, make sure you hit the subscribe button, hit the notification bell. If you're a regular returning viewer, hit that little thumbs up icon. That means a lot. I really, really appreciate it, and I'm glad that you join us here today. All right, let's go ahead and get started with our S&P market. So, looking here at the ES, yesterday we talked about a potential reversal at this level right here, and this level that we looked at was, if I go to a 15-minute chart, you can see it as well. It was this drop, base, drop. Now, remember, our rules would say that now we found it on the hourly level, and the reason we picked this level was because of the fact that it was this prior pivot as well. Now, in this case, our stop, the tightest our stop could be in this trade would be right here. So there's no reason for you to have taken a stop out on that position. So let me know. Oh, shrink my head. I'm so sorry, everybody. Yep, I do have to shrink my head. There we go. So let me start this all over again, and I'll review that level. So the level that we talked about yesterday was this 3461 by 3467 zone, and we had picked it because of this area that was a prior demand zone that price had bounced away from. This is a really good picture of how fair price value areas work. And then there wound up being a pretty strong move away. Now, in this position, your stop would have to go above this 15-minute chart, right? Because the tightest you can place your stop is above the wick of the leg-in candle on a 15-minute time period. That's kind of the rule that I want to look for. So that wound up actually working. It's gone about 30 points from that movement. We wound up getting a really strong move away of somewhere over 40 points initially. So let me know in the comment section below if you were able to catch that trade. If you were, phenomenal, good job. Are you still in the trade? If you're still in the trade, then where's your target? Well, I think that you got to look down here to 3,400, this 33.95 as your target. Remember, nice, those still in it? Beautiful. I love that, Mr. Tapia. That is good to hear. On my big picture trend, our 4-hour trend is still down. So we do still have the 4-hour downtrend. Nick you got in and got out. Okay, take a little coin. 33.94 is an excellent target. That's a really good target because that's our next quality demand zone, is down here on the hourly time period. Now, the thing we like about this demand zone is it was formed at a pretty good time of day. It's got a decent move away, although not the strongest, I will say. You know, when I look for my moves away, I always talk about the angle at which price leaves the level. Here is a 90-degree angle, right? The angle that price left the level was a 41-degree angle, right, roughly. And I say roughly because I'm just using the angle that's here on my chart, which has 41.33 degrees. When I look at this, for me, I like to use the 45-degree angle as really the sweet spot. And, you know, it's close, right? It's close that you could give it that. But we use this as a scoring technique, right? And the scoring technique that we say here says that if it's in this level down here, it scores a 0. If price is in this level right here, it scores a 1. And if price is in this area, it leaves the level in this area here, it scores a 2, right? So that would be our essentially our probability scoring on the return. In this case, you're hovering between a 1 and a 0 here, which means it's not a perfect setup, right? So that tells me that any basing before the level is actually going to make this that much less probable of a stopping point. The other thing to consider is that that's a demand area in the context of a downtrend. So that already makes it a little bit more challenging, and it is not a demand area on the 4-hour chart. Okay, so all of this to say that yes, I think that that 34 that I think that level, that 34.95 area, is a pretty good level on an hourly chart. It is not a foolproof level. It has to be a confirmation entry because it's against the trend and it's not a super strong move away. Possible breakdown in equities, says Nick. I think that could be the case. I wouldn't be too surprised to see a breakdown below this line right here. And I'm going back a little bit to see where this area's been touched. It's around this 34.16. I'd still want to see some narrow range candles in front of that level. Now, what if we get a rally back up, right? What's our retest area for a rally back up? Well, on some sort of a rally back up, if I go to a 15-minute chart, this is the cleanest, unfortunately. I don't usually like to take just pure pivots, but this area down here has already been tested right there, and so to me, the pivot is really the cleanest zone. I would prefer if there was a little bit of basing before the pivot, like a little bit of wickiness here. I'm sorry, not before the pivot, after the pivot. So if we had this rally base drop and then a little bit of maybe a wick over wick candle here would be ideal. Let's see, 3504. Greg says 3504. So 3504, absolutely, when you come all the way up into this region. But think about it. If we get to 3504, what will have happened to my trend direction, right? If we get to 3504, my trend direction might have already shifted, and so it's going to not be as high of a quality level, Greg. And so when I think about that zone going up to 3504, that would lose a little bit of that credibility, right? Just a smidge of that credibility. Next would be the NASDAQ. So in our NASDAQ trade yesterday, we actually got a little 15-minute move off of this area right here. It moved all the way down into this region, but then didn't get quality enough basing for us to kind of jump in. Although, we got a little bit of a move away here, but it didn't really make its presence felt, if you will, on the breakdown. And it's just kind of hovered around. It's really been kind of sideways. Now this morning we're down a little bit. Looks like Facebook is going to open down this morning. Not Facebook. I'm sorry. Netflix is going to open down this morning. A couple of our tech companies are getting a bit weaker. Let's just take a real quick look at that. Apple's opening down a bit. Facebook's opening up, actually. 267 is opening up at 274. Amazon's opening up a little bit down. Microsoft a little bit, but the real biggest one is Netflix. It's opening down about $30 a share. So Netflix is down from $5.25. It's going to open up around $4.97, which, oh, by the way, if I pop this up, we have on our daily chart of Netflix, let's pull up our daily levels. If we continue to go below that $4.97, we do have a little bit of basing in here. I'd like to see it get a little bit lower than that even as a possibility. So now my point behind looking at all that is to say that we are looking at a bit of weakness in here. Prices continue to come down. I think this one makes for the better breakdown, even better than the S&P did, if you want to look for a potential breakdown. If you want to look for a potential breakdown below this region, the next thing that I would say is for a reversal similar to the NASDAQ or to the S&P, the NASDAQ reversal is up here at the pivot. $11,726 by $11,743. We do have this little area here, but I think this is a retest of this little zone over here to the left. And so that's the level that I would look at for today, although I think the breakdown is probably the better trade. All right. Next would be the Russell. So our Russell position, this is annoying. Let me pop this over. I got to change these colors. I had a couple people request a color change to this brighter green. This is frustrating. I had my entry here at 1632 half, actually 1632.5, and this candle got to 16. This candle right there, let me get on it, got as high as 1632.3. That's what we call being nicked by a tick. I mean, just barely missing the entry. There's just nothing you can do about that, right? I mean, you could say, well, shouldn't you put a bigger buffer zone on your levels? Well, then how big of a buffer zone should I put, right? Ultimately, it was a very, very small miss, swing and a miss, strike one. But the other markets, the S&P and the NASDAQ, both met entry. S&P and the NASDAQ both met entry on their shorts, and so didn't want it anyway. That's good. What's a way to think about it, Nick? Unfortunately, there's nothing we could have done about that trade. I will say that this level here, which was tested in the NASDAQ, has not yet been tested in the Russell. So it's still in play. And I'll go back and show it to you in the NASDAQ. So in the NASDAQ, that same level here, that 2:15 a.m. level, which hit here and moved down, that's that same 2:15 a.m. level, which has not yet hit. So in the Russell, I'd say it's 1619.9 by 1622. I'm going to take it down just a smidge. 1619 half by 1622. This level up here, by the way, is not dead. It's just confirmation. All right. And then the Dow Jones. The Dow Jones we had yesterday morning. We had looked at this 15-minute level. Price came in, and on this one, let me zoom in on that so you guys can see all very clearly. Just a bit outside, right? I mean, just barely missing the tick. Now, I don't draw my lines, frankly, with a tremendous amount of accuracy because I'm trying to go fast. So in reality, it missed by a little bit more than that because this is actually where you should actually have drawn the line. Now, if you go wick to wick and you drew your line right here, you use this lower wick in this candlestick here, then you get filled. It's nice to have what I like to call revisionist history, but I don't have revisionist history. That's just a trade I missed. I don't typically take a YM position anyway, but for those of you that do, that's the level that we looked at yesterday. It'd be nice to have revisionist history, man. There's a lot of things I might change of the mistakes I've made. No, just kidding. Here is a potential breakdown line right there, 28,034. So, you've got a pretty good area of demand down here at 27,933, which actually has a pretty strong move away. It's actually a much stronger move away than the one that we looked at in the S&P. So this would make a really nice target on a breakdown below here. Once again, if we get the retest back up, you've got a couple of levels up here that are worth looking into on a retest back up. But I still think that your best one is the actual pivot itself, just going safer all the way to the pivot. All right, so those are our 4 equities markets. Let me post this grid real quick inside of the daily trade feed. All right. Next, let's go to commodities. Well, Ryan, it depends on how a great question. It seems a bit risky to take the breakout with the target so close. That depends on how big my risk is, right? So on here, we're looking at between 28,034 and 27,933. That's a pretty decent little run, right? You got 100 points worth of potential. So what if I'm only giving up 10 points worth of risk, right? I'm only giving up 10 points worth of risk. So, Ryan, I don't know where my stop is yet. Why don't I know where my stop is yet? Why don't I know? And I won't know until the breakout occurs. Why won't I know? Somebody type in the chat box why we don't know where our stop is going to be until we get our breakout. And that's one of the unique rules around breakouts is that you cannot place your stop until the breakout has occurred, because I need to wait for the base. And it's not just the base. It's not just waiting for the base. Very good, Lee. I need the pivot point before the breakout. So what I mean by that is if price comes down into here and we get something that looks like this, and then we break out. Well, in that case, my stop would probably be here, right? Because that's my cleanest pivot before the breakout. It's the stop doesn't go outside of the basing before the breakout. The stop goes outside of the previous pivot before the breakout. Okay? That's really the thing that I've got to look at and pay attention to. All right. Let's see. Mr. Chuck, I want to ask a question. Does the 6-candle rule apply to all time frames? The reason I ask is because sometimes when a stock has an all-time high, 15 minutes has 6 candles, doesn't go anywhere, but 1 hour has only one. So, yes, Jasmine, it does apply to all time frames. But that's why I color code the time frames in which I look at my levels. So if I found the level on a daily chart, then the 6-candle rule would be a daily 6 candles. If I found the level on a 15-minute chart, then it would be 6 15-minute candles. And if I found the level on an hourly chart, then it's 6 hourly levels, right? So I'll give you a good example. Here's a stock that we took in our live trade room a couple of weeks ago, actually. So here's one that we took a couple of weeks ago, and this was a pretty aggressive move. I don't know if you guys remember from the live trade room when we looked at this one as an opportunity in Peloton. And we looked at this as a breakout candidate. And the breakout candidate was above this area here where we had a bit of basing, and we got a pretty good breakout right in that region. Well, if I look at this on an hourly chart, if I took that breakout 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere. So I might want to say, okay, time to get out of it. It's not going anywhere. But I didn't find the level on an hourly chart. We found the level, we found the breakout trade on a daily chart. Okay? So since we found the breakout trade on the daily chart, we were able to stay in it for those people that did take it and run it all the way up. So I had a very good friend yesterday. He told me he rode that thing from around 100 up to 138, which was a really nice ride. But that's why that 6-candle rule, while it's very important, you stick to the time frame at which you find the level. All right, let's move over to commodities. So in commodities, crude oil. So in crude oil yesterday, we finally broke above that 41.40, and then went nowhere. Speaking of our 6-candle rule. We didn't get super quality basing above here, but it's just that level's just not giving us any breakout opportunities. We're going to just have to wait for price to really start to move and then get long on a breakout. We're just not getting a bunch of quality basing opportunities. So I'm just going to hold off on really anything in this market. There's not a whole lot for me to look at. So I don't love it by any stretch of the imagination. If I go to a 15-minute chart, it's not 4 hour, 15. If I go to a 15-minute chart, we do have a little level right here where we could see a bit of a reversal. But there's not a whole lot of levels that are making me super duper excited as far as my zones. Next would be gold. So looking at gold, we're now 3 days into our iron condor in gold, and we're starting to get near that upper range, that upper band. For those of you that are getting near that upper band, we are coming into the origin of this really strong drop, but we're basing in front of that origin of the really strong drop, thus making it a bit weaker. So I'm actually going to look a bit lower into this area right here. Whoops, that is not the drawing tool I wanted. As a potential zone. Now, this area here, not formed at a great time of day, right? Not a great time of day for our levels. Formed right around actually the Australian market open but a pretty strong move away, and that's really the thing we're looking at for this, is that it was a decent move away. All right, nat gas, not a whole lot to add with our nat gas conversation from yesterday. A little bit of demand area in here. Technically, we got another one that formed right in there, but our trend is definitely up, very strong to the upside. We eclipsed over 3 on natural gas, and so you could have a pullback into this region right there. That would probably be the one that makes the most sense. Copper, we looked at copper yesterday from a bullish perspective because we started to really get some bullish momentum after that breakout. And so if copper gives us a pullback, which right now we're getting a little bit of a stall, you got a couple of levels here. You got one level here and one level. You got a little bit of a level on top of a level inside of copper. I like the upper one in this case a little bit better because it was this area of resistance in the past. So if we get a little bit of a breakdown and a pullback into here, the other thing you could do is look to take a breakout above this region here. When I look at this on a daily chart, you don't see really anything to stop it. When I go all the way to the weekly chart, you really think that I think that this up here is our eventual, target of where I think price can make it to. Soy. So soy is sitting right below the breakout point. You may have actually taken a breakout here. If you did, it's not really going a whole lot of locations, but it does still have a potential to move. If you don't like the breakout, which I'm not in love with this breakout, I'm not in it at the moment, and I'm not in love with it one way or the other. We do certainly have room to roam. We are definitely getting, this is our second touch, third touch. If you don't love it, wait for a pullback. You could get a pullback area right here at 1065 by 1063. And then corn is up into the supply level, which would be a confirmation short because our big picture trend is for sure up. Well, that confirmation short, you've got your active, your line of active right here. So the trade would be active at this point if you took the confirmation short. We're almost to the distal line, which would then cancel an entry on that trade. So if you didn't get in, don't get in now on a short. If you did, I think your long is the better trade because remember, we are trend traders. Primarily, we trade with the predominant trend direction. Trading with the predominant trend direction is what most traders need to do in order to find long-term success. I cannot stress that enough. One of the things that I hear all the time is, what's more important, trend or curve? And I will tell you, trend, 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 trend. Did I mention trend? Trend is, I think, super important, and trading with the big picture trend direction is one of the biggest mistakes I think traders make, is by not trading with the big picture trend direction, and they tend to go against it. So, all right, I'm off of my proverbial soapbox. So let me share this grid inside of our trade feed. All right. And then last but certainly not least, bonds and currency markets. So yesterday we looked at the ZN. So we did get a little breakout in the ZN trade. Price gave us a nice little move away. We've now come back up. We're close to that area, but there's still no reason to be out of this short if you got in, although you may have taken some profit on that position already. If you did not get in, but you still like the setup for the short, I'd look up in this region here is really our next best level. We could use this as the retest, but we've already come back into there and we're starting to make the move away. So I'm not sure that we're gonna try that one again. You might want to come all the way back up to here. When I look at this on a much bigger time period, this is actually a pretty decent move away. Now, we haven't seen a decent move away like that since back in here, which was, I want to say, there was this little blip that we had here where we came straight down and then rallied straight back up and then went nowhere again. So, I can see, if you want to be a little bit longer term, a little bit more of a swing trade, price making it down to here, but then I would be a little cautious about another snapback rally. Remember, the bonds are going to be very, very much tied to a stimulus, and anything that happens in a stimulus is a big deal. Okay? All right, next, the New Zealand dollar. So looking at the New Zealand dollar, we looked at this one yesterday. We had a really nice move off of this level yesterday, on Monday. And then we looked at yesterday's 1 hour zone, and we did get a touch on the level. 1, 2, 3, 4, 5, 6 candles later and it's towards the end of the day, and we had basing in front of the level. So if you got into this in the afternoon with basing in front of the level, the market really had gone basically nowhere, telling you to move your stop to break even. That was really what that trade told us to do, following our rules. Now, if you stayed in it, you got a small stop out moving up out of that region. And we had a couple of small stop outs in currencies yesterday. Yesterday was a good day for equities and an okay day for currencies, but not great because we had a couple of small stop outs. So when I look at, kind of where we can reverse today, I see that this area here of confirmation is still very much in play. When I look at the 4-hour chart, my 4-hour trend is very sideways. And being this sideways overall in my 4-hour trend makes it a little bit more iffy on whether I would take anything. So I'm going to leave just this confirmation short as my level at the moment. The Aussie. So this was our Aussie trade from yesterday. We had looked at this area of supply. Now, interestingly enough, I cannot stress this enough. Oftentimes, old supply will act as new demand. And here we had a little rally base, very strong move away. So I thought, okay, that's going to be a pretty good little level when price returns. Well, price returned, and it cut right through it like a knife through butter. It just cut it right through. But that old area of supply then proceeded to act as a new area of demand. And we saw a pretty strong move away from that level. It was actually a really nice move away, from that level. And the reason that we got that move away from that level was because we saw that there was enough orders that were there in place in order to cause price to run back up. So price rallied back up pretty hard out of this zone, and it came into our supply level. And then it kind of bounced out of that supply level in the overnight. Now, that was an overnight level, so I don't expect most people to have gotten it, although John and Nick and a couple and Jose, a couple of you that are internationally, maybe you were able to see that, pulled a few points out of it. Now I think actually we're sitting at a good potential for a breakout. And I think this is a good potential for a breakout, not right now. If price continues to run up, that is not a breakout because there's no basing. But if we slow down here a little bit and we get a little bit of basing, then it becomes an opportunity. If price just continues to run, then you've got a retest opportunity into this region. Which right now I don't have either one. Right now I don't necessarily have either one. So what I'm going to do real quick is I'm just going to detach this window. I'm going to move it over to my other chart, my other screen, and just keep an eye on it for just a few minutes. All right. Next, the euro. So our euro level yesterday, inside the euro, also very similar picture. We had a very strong move away in our euro position yesterday. We did come into the 1 hour level, which was a confirmation short. Looking at this confirmation short from the 1 hour time period, price came into the level, may or may not have gotten you filled. Right? I will say that it didn't come close enough for me to get a trigger for an entry and then moved away. So it's totally up to where you had your trigger. We recommend placing the trigger at the 50% mark of the zone. And so you may or may not have gotten a trigger in this position to get you in. If you did get in, it didn't really go anywhere, right? It gave you a little small profit. And if you didn't get in, then no big deal because you wouldn't have gotten in the second time because of the basing here in front of the level. Right, thus nullifying the zone. So now the demand area here is, I think, going to be the better trade. The pull back to this demand area here, I think, is your better zone. Canadian dollar. Remember I said there were a couple of small stop outs? Well, here was the other one. And this son of a gun, I mean, you want to talk about just being cut through? Hi, kapowie, as they say, this just blew right through it. we blew right through that level, no stopping it, but it became a speed candle, and speed candles do tend to get retraced. So I will look to this area here as the next zone of a retest. When I find that on the 1 hour, that's not as pretty on the 1 hour as it is on the 15. So I'm going to wrap my lines around it as a 15-minute zone. Remember, the reason we are using the 15-minute zone is because now our 15-minute 6-candle rule comes into play, right? Rather than the 1 hour 6-candle rule. So that would be the big difference. So real quick, do me a favor, somebody type in the chat box, because for some reason it looks like all of my viewers dropped out. I want to make sure that I still have everybody here, because it looks like everybody dropped out, but I can't hear or see anybody in these YouTube rooms like I can in our normal Zoom live trade rooms. So type in the chat box, let me know if you can hear my voice. Okay, good. So we're still broadcasting. All right. So if we get a little bit of basing then in front of this level, that would be, I think, where you've got a decent breakdown, because this is a clean air rally, right? There's a clean air move up. So a little bit of basing in front of here could give you a decent breakdown. Great British Pound level yesterday. Once again, another one of our levels that just yesterday, as we saw really strong movement in our currency markets. And then we're going to look at the Japanese yen too. Same picture there. So now I'll be looking for retests back to these speed candle moves. The origin of these speed candle moves, retest back into here, I think is going to be the best level, 12986 by 12975. And then my last market here, Japanese yen, kapowie. That thing rocketed up yesterday. By the way, completely just totally shocked me at the strength of that move. Frankly, should have shocked most everybody at the strength of that move, where we had a really nice little wick over wick area here. I felt like, okay, we may get a little reversal, and then boom. Now, here's what's fun. Look at the little tiny stop out. You did have other opportunities to get long on pullbacks throughout the day. But that one wound up being a little bit of a stop out trade. And once again, we still have, before a speed candle, the origin of this, most recent rally up. Now, we have come into this supply zone that we had in place, but that supply zone going to a 4 hour is off the hourly chart. Our trend is definitely now up, and our momentum is up. So the only way you can take this is as a confirmation, and the market cut right through it without giving you a confirmation entry anyway. So I think that this is your best entry on a pullback. It's kind of far away from current price, but it is the origin before a very strong move. And so in being the origin before a very strong move, I think that that's still going to be an okay way to go overall. Now, tomorrow is our live trade room at Traders Army, so we will not be doing the YouTube live session. And tomorrow's live trade room is going to be hosted by Justin Krebs. So Justin Krebs will be doing tomorrow morning's live trade room. So those of you guys that are Traders Army members, enjoy our session there. Justin's a proverbial wizard. If you're not a Traders Army member, I invite you to go to tradersarmy.com and learn a bit more about it, to see if it's something that you want to become a member of. I'd love to have you come and join us and see what it is all about and what it is that we do. So I hope to have you there, and you can join us in our. If I go to the calendar page, you can see that we do a lot of live trade sessions throughout the course of the week. Tonight, everybody, is going to be our Wealth Essentials class for our investor-minded folks. We're going to be covering cash-secured puts and looking to continue to build our model portfolio. So, all right, everybody. Well, that's all I have for today. I hope you guys have an excellent day. If you've got any questions, please feel free to shoot me an email, chuck.fulkerson@tradersarmy.com. Thanks so much for joining. Talk to you soon. See ya.